We had a giant bet for us, and I was extremely confident in the outcome.
This is Michael Burry. He's mostly known for The Big Short.
Short everything that guy has touched. I want $500 million more swaps.
His bet against the housing market right before the 2008 crisis. This made him and a couple other people billionaires, while the American economy collapsed. What most people don't know is that Michael Burry is also the man that unknowingly lit the spark that led to the GameStop frenzy. Burry bought a stake in GameStop in 2019 because he believed the stock was undervalued. He sent 3 letters to the GameStop owners, asking them to buy back shares and to clean up their act. Back then, Burry couldn't have imagined his efforts would lead to this.
Dominant market themes this week have been a lot of people that are defending the retail. What's making a big move this morning?
Wall Street Bets want to bring on a member of that forum to chat about this now. Who is Ross?
Have been earnings. What's making a big move this morning?
I will hold my 2 GameStops and buy a Scalper's Market Xbox.
Louis, thanks for coming on here, man. I know that you were kind of watching what was playing out in Wall Street Bets for quite some time. Last couple days, you joined as
a lot of people that are defending that in the shares. Also making a big move this morning.
One distinction that I think is important for our viewers to understand.
The battle between retail investors and short-selling hedge funds has captured global attention, spurred regulatory investigations, and stoked talk of a financial revolution. Here's a closer look at how Michael Burry unknowingly started what can now be called the GameStop revolution. After his Big Short, Michael Burry kept a pretty low profile. He focused his attention on betting on water, Asian equities, and small-cap stocks. The Scion asset management firm, founded and owned by him, had purchased about $7 million worth of GameStop stock in late 2018, but sold it in the second quarter of 2019. Burry reinvested the following quarter, disclosing 3 million shares worth $17 million. He also wrote a letter to the members of the board, in which he told them that he was concerned with the way capital was being managed, and he urged them to complete a $238 million share repurchase at once. Such a repurchase would increase earnings per share dramatically. He stated that shareholders were staring at all-time lows in GameStop stock, and they were seeing very little evidence that GameStop had effectively leveraged its elite position in the gaming universe. He stated that Amazon, not GameStop, bought Twitch in 2014. Instead, GameStop started buying wireless store assets. And in 2017, Amazon, not GameStop, bought GameSparks, while less than a year ago, GameStop reversed course and sold its wireless store assets. He said, "Shareholders are right to worry." He finished by saying that the shareholders expect that GameStop's business will perk up a bit during 2020 and 2021 as the new console cycle finally gets underway. He also reminded them one last time to ensure the execution of the remaining repurchase authorization in full. GameStop's ascent into meme stock stardom began in the summer of 2019. In September, Keith Gill, a 34-year-old financial advisor in Massachusetts, got into the GameStop trade, paying $53,566.04 to buy 1,000 call options on the company, and posted his position to Reddit. He posted under the pseudonym Deep Value, which eventually became a sensation with millions of followers. By July 2020, he was publishing videos to YouTube under the pseudonym Roaring Kitty, presenting in kitten-themed t-shirts his detailed analysis on why GameStop could gain big if the market grew more optimistic on its sales of new PlayStation consoles. The GameStop play helped set off one of the wackiest and most out-of-control trades in financial history, which minted billions of dollars in paper profits for some investors, including many amateur speculators, and caused big losses for some of the world's most sophisticated hedge funds. Let's go back to Michael Burry's letter to the members of the board. In the letter, Burry says that reducing GameStop's outstanding shares would result in multi-fold greater impact per share for every single other achievement of management. Another letter was sent by Scion to GameStop's directors 10 days later, in which the firm ramped up the criticism. Back in 2014 and 2015, there were assets and strategies available to GameStop directly within its wheelhouse, Burry said. Instead, Amazon and others with more insight took advantage and burglarized GameStop's wheelhouse while GameStop focused on its diversification transformation. The company had recently fired 120 employees, and the shareholders were put in a very vulnerable position because of the board's decision. Burry also criticized the $280,000 in annual compensation for each of GameStop's non-executive members. He also directly called out 4 of GameStop's non-executive directors and told them to resign. Finally, he also told the CEO, George Sherman, to step down to free up room on the board. In April 2020, Scion Asset Management Capital owned a 5.3% stake in GameStop that cost an average of $4 per share. The fund gradually reduced its position to 1.7 million GameStop shares, which were worth about $17 million as of September 2020. Some people still believed in the company, though. GameStop received $76 million from Chewy co-founder Ryan Cohen, the entrepreneur who sold his online pet supplies business for $3.4 billion in 2017. This purchase gave him a 13% stake in the company. Cohen parlayed his investment into 3 board seats earlier this year, and his goal was to revitalize GameStop and turn it into a major e-commerce player. Backing from high-profile investors, combined with the YouTube videos by Keith Gill on his Roaring Kitty channel, promoted the stock, stoked enthusiasm for GameStop on the Wall Street Bets subreddit. They also realized that GameStop's low stock price, and the fact that it was one of the most heavily shorted stocks on the market, made it a prime target for a short squeeze, bidding up the stock price so short sellers were forced to buy the stock, sending shares even higher. Wall Street Bets members executed their plan in January. As the stock price started rising, more and more day traders, and likely some institutional investors, waded in. GameStop shares skyrocketed as much as 2,500% from the start of the year, briefly hitting $483 and giving GameStop a market cap of $34 billion. At this time, GameStop was the most traded company in the world. The Redditors bought stock and options, trying to squeeze professional hedge fund investors who were short, and it worked. Michael Burry sold his shares before they peaked in price on January 27, 2021. If he sold Scion's entire stake at Monday's high of $159, he made more than $250 million in profit, a roughly 1,500% gain in 4 months. If Scion had held on to its 3.4 million shares as of April 2020, it would have scored an even bigger windfall of $540 million. At GameStop's Reddit-fueled high of $483, Burry's maximum holding could have been worth over $1.5 billion. Instead of billions, however, Burry looks like he may have made about $100 million on GameStop. In the fourth quarter, GameStop traded between $10 a share and $20 a share, over 5 times Burry's cost at their highs. In a January 26th tweet, Michael Burry called the squeeze unnatural, insane, and dangerous. He added there should be legal and regulatory repercussions from the trading. It turns out, Burry was entirely out of GameStop by then. Hey guys, thanks for watching the show. Make sure to click that like button and the subscribe button, and we'll keep making these mini documentaries every week. Thanks.